unless you know the Tales of Candy person, um, then you wouldn't know because that's where it was based.
That's off limits. Is that what it is?
That's where it was based in Cabrini Green.
Oh, is that right?
So yeah, there. The original movie was filmed in Cabrini Green.
Wow, I had no idea. Okay, so you put me on to something.
So next time you watch Candy Person, now you know.
All right, listen, man. What's up, Doc? If you guys don't know, this is the Incredible in the Black podcast. I am your host, Big O, Mr. in the Black himself. Typically, I can never do this alone, but today I'm doing this alone. But I do have an incredible guest here with me tonight to talk about why the damn rent is too damn high. I have economist Dr. Christy Scott with me here tonight. I know that we've had her on the show before. I'm familiar with her. I know some of you are familiar with her, but for those who are not, Doc, please tell them a little bit about yourself.
All right. Good evening, everybody. I am Dr. Christy Bishop. Scott is my maiden name. And I am a PhD level economist. I'm also the founder of Verity Consulting, which is an economic consultancy focused on helping businesses understand their consumer using data. I also spend a little bit of time weekly explaining economics to all of y'all via my Instagram and my Twitter page because I believe that economics is all around. It's all around us. We are living in a society where economics is everywhere, and we often don't get to see or understand how it shows up in our lives. So I talk about that weekly a little bit, and I try to make it a little fun. So I guess a little bit of background. So I'm a full-time for my full-time day job. I'm a full-time economist, and I lead the data team at a federal government agency here in Washington, D.C. And everything I share with you today is going to be from my own personal perspective and does not reflect the views of that federal agency. And I'll actually just be joining as myself and the founder of Verity Consulting. So we can chat about whatever you want to chat about.
Okay, because Lord knows I do not want to get you into any trouble, whether with Big Brother or the other Big Brother in the other room. So I'm going to make sure I behave correctly tonight. One of the reasons why I wanted to have you on this have this conversation with you, and I wanted to have this conversation actually a while ago. My wife and I, we were going through the news like we normally do, and an article came up by Michael Green. I think he is if I'm not mistaken, he's a venture capitalist, but he's also he's not an economist by trade, I don't think. But he wrote an op-ed where he talked about how the poverty level, which is at $30,000 right now for a household of four, is old data. And for those of you that might not be aware, and Dr. Scott can go ahead and lean into it, that data was actually produced in the 1960s, if I'm not mistaken.
63 to 64, yes.
And you would hope that now in 2026, that would have been revised like so many other things have been revised, but it hasn't. If anyone that lives in a major metropolitan area, and I have a few friends that are, examples or pinpoints to this, single individuals making over $100,000 a year, living in the Washington, D.C. area, and they are having a hard time making ends meet. So like I said, that's where the root of the conversation came from. And that article, when it came out, caused a lot of stir. There were people telling him he was nuts. There were people telling him that he was spot on. There were some people like, hey, maybe you need to go back and read some more books, and we'll figure it out when we come back later. We talk some more about it. But ultimately, it caused a lot of stir. But the deeper we get into, I guess, I don't want to say this administration because that's not accurate. What I will say is that what we have seen within the past 3, 4 years at the very minimum is that wages are not keeping up with cost of living around the country, and everything continues to increase in price. And it honestly feels like there is no relief in sight. So with all of that being said, I got to ask you first, did you read his op-ed, and did you agree, did you disagree? Was it bullshit, or was there some actual tangible data?
Should $100,000 a year be the new definition of poverty in America? One longtime financial strategist is arguing it should be. Again and again, we know that Americans say they cannot make ends meet with the current cost of groceries or housing or childcare, among other things. The U.S. poverty line was developed 6 decades ago in 1963. And this is what it looks like today. The federal poverty line for a family of 4 this year is $32,150. But strategist Michael Green argues the poverty line should actually be $140,000. And he joins me right now. Michael, you're a portfolio manager and chief strategist at Simplify Asset Management. And you wrote a Substack titled The Valley of Death, Why $100,000 is the New Poverty Line.
Has been calculated from a formula that was introduced in 1963 to 64, and it was introduced by Molly Orshansky. That's not an incorrect statement. It's also not necessarily a wrong measure, so much as it's answering a question from 1963 as opposed to answering a question for 2026. So there are some gaps in the measure. It's not just the level, but the measure actually at the time only included there's a thumbs up. I'm going to do that a lot. I'm going to try not to do that. It actually
Girl, please, you good. Go ahead, man.
It only included food costs at the time.
Okay.
Taking into consideration food costs.
Ooh.
Leaves out is, housing costs. If you are on SNAP, that's not included in the measure. If you have earned income tax credit, that's not in the measure. There are a number of things that are not in the measure. However, the Census Bureau has a fix for this, and they call it the supplemental poverty measure. Okay, that actually exists. The supplemental poverty measure exists, and it does account for those additional things. Now, there is still a gap, right?
Hold up. So what you said is that there is a supplemental poverty level. However, why not just put everything together? Why you got a separate? Why are you doing it piecemeal? Why you got to do everything piecemeal? Why not just put everything together?
I don't know exactly, but the supplemental is probably just kind of an updated revision without changing the original. And you take those things into account. So they took into account the things that the original federal poverty measure left out. But even that still kind of underestimates things. I think the National Academies in it might have been 2023, but they had an expert panel that reviewed that even the supplemental poverty measure still didn't kind of close the gap, right? In accurately estimating how much poverty U.S. households are experiencing, whether they're at or below a certain level. And so currently, federal programs are based on the original poverty level, and it is adjusted for inflation, but that's it. The supplemental poverty measure actually includes the additional things. And so there are groups out there that that come up with different measures, maybe not additional, different measures that they believe more accurately capture the level of poverty. There's this group called United for Alice, ALICE is an acronym, and it stands for Asset Limited, Income Constrained, and Employed. And it's an organization that's kind of a conglomerate of a number of United Way affiliates, some nonprofit orgs, some corporations. And I want to say about nonprofits, a number of nonprofits across maybe 3 dozen, 3 dozen states or so. Um, and they've all come together to develop this poverty measure that they think is a bit more comprehensive. And that measure actually, I want to say in 2024 or 2025, estimated that it was upwards about 40% of US households are either in poverty or at or below um, sort of this basic cost of living level. And so then you've got the original measure, and then you've got the supplemental measure. The supplemental measure um, suggests that it puts in 2024 for a 2 adult, 2 renter kind of household at 39,000, which is about 24% above
Yeah,
the
32,
federal.
32,000 is the current, I think.
Correct. So it's a little bit more. It captures a little bit more, but there are critics that say that even that's not enough, and so there are groups that have come together to just kind of put together what they think is a more comprehensive measure. And so, what measure gets used is ultimately a policy lever at the end of the measure. And I can imagine that maybe they are lobbying for the use of that. I know that the national academies, they've actually been pushing for the federal government to make the supplemental poverty measure the official poverty measure. Yeah, they've been pushing for that.
Makes sense. All right. Now, for those folks that don't know, you're a health economist by background and study, correct?
So I am a consumer economist by background and study. So I actually studied the economics around consumer behavior. The outcome of my research were health outcomes. And so that's kind of how I got into the health space. And so for about 11 years, my day job has been as a health economist in different federal agencies. And so I do that as my day job, but I am trained as a consumer economist. And because consumers have health, there is a bridge there that I'm able to connect.
I dig it. So what you're basically telling me is that you watch how people buy stuff, why they buy stuff, and all the cycles that go around with it.
All the time.
Okay.
All the time.
Okay. So what I'm going to do right now, I'm going to make sure that if you guys, any questions and any questions that you have that you want to throw at Dr. Scott, that you can throw it to the show, or she's going to be able to give her Instagram at the end of this conversation.
Sure.
I can hit her up direct. Is that all right? I don't want to get you in trouble.
Yeah, I can give you my Instagram. I can give y'all my email address if you have additional questions, for sure.
No problem. Okay, I got you. But I got a question for you. And I had to make sure to write this thing down. Now, healthcare is one of those costs that explodes in a way that the old numbers never really anticipated. It lands harder on Black families primarily than, with medical debt, out-of-pocket costs, and all of it. Now, can you walk us through how the price of simply staying healthy quietly drains Black households' wealth, and whether our official poverty measures are even equipped to address that or to see that in an accurate fashion?
Yeah, I absolutely can. I'm going to answer it a little bit backward. No, the official poverty measure does not capture that for the reasons that I mentioned in the first question. There are things that it doesn't capture, like SNAP and housing assistance. If you get medical assistance, it doesn't capture it there. But this is a major disparity, especially for Black households. I was just having this conversation with a good soror of mine and best girlfriend from
Yes, they are.
Um, so, you know, I'm going to say something that I think might be controversial. I was having this conversation with a good sort of mine. I had this conversation actually earlier today with my sister, and that is, um, for us, we tend, and by us, I mean Black households, we tend to be more affected by rising healthcare costs and things like that because major health challenges, unexpected health challenges, are typically impact us more. Why does it impact us more? Because those things are typically paid by liquid investment, liquid assets. And as Black households, there's a major disparity in our liquid assets compared to non-Black households,
For those folks that don't know
specifically
what liquid
white
assets means,
households.
can you
It's
describe it?
cash. It's just cash, y'all.
Thank you.
It's cash. Okay.
I just want to make sure we make it clear for all the
And
folks, just in case. We don't want to talk over
yeah,
anybody's heads.
for Black households, our assets are typically held in our homes if
Yeah.
we are homeowners, right? It's gonna take a long time to put your house up, sell the house, get the money so you can pay this medical bill.
Take the equity out and all that other stuff. Yep.
That's right. And so because of that, we face an issue where surprise medical challenges impact us more. Additionally, this is the controversial thing. In Black households, healthcare for us is reactive
Yeah.
because proactive
Means having
preventative healthcare
Yeah.
is behind a paywall.
Yeah.
I'm tell you what I mean by that. We respond to major health issues to the extent that we can when they come up, but it costs money for proactive preventative care that we don't necessarily have access to. It's one of the things that, as I grew in my career, it's very clear to me that I am privileged to be able to engage in proactive preventative healthcare.
And when you say proactive preventative healthcare, you mean access to regular health insurance coverage. Is that correct?
Access to regular health insurance coverage. Maybe you want to see a therapist, and a lot of behavioral health practitioners do not accept insurance, right? So that you can maintain your mental and emotional health.
Yeah.
Maybe you want a gym membership and you want a personal trainer, right? I am very fortunate in that I have access to a fantastic personal trainer that I get to see twice a week, right? This is preventative and proactive, right? That keeps me from having to be surprised by some major health event and be in a situation where I have to choose whether I'm going to pay for my medical bill or pay a bill, another like a utility bill, or put food on the table. That proactive preventative healthcare sits behind a paywall. My sister is also of the belief, and I don't disagree with her, that there's a hurdle when it comes to trust in the medical system, right? And having health caregivers, providers specifically, who will actually listen to you. And so there are all of these factors that make it really, really difficult for us. That sort of drains our Black wealth. And I think the extent to which we can, there are different ways to address this. There are some folks that argue that, the health usage is the drain, and you tackle that. And there are some that argue there are ways to build your wealth so that when the drain hits, you are not as severely impacted. And so, this is a major thing because I remember before I went to pursue my PhD. I'm originally from Chicago, y'all, South Side, and I lived in a really nice, and my parents still do live in a really nice neighborhood. Um, but I was living in what was then a food desert. Now there's also all this research about food deserts. There's research about food swamps.
Mm.
Um, and for the audience, a food desert is a geographic space where there is a lack of healthy food options. And a food swamp is a geographic space where there is not a lack of food options, but they are just not the best for you.
Mm.
So you think, oh, I don't have to go far for food, but your food options are they're not the greatest. And I remember thinking, how do I, this is prior to my PhD, our health would be so much better if our diet were to include these things as opposed to these things. How do I access those things? I got to make sure I have a car
Mm.
or reliable transportation to a part of town where those things are available. And then I got to make sure I have the disposable income to pay for those things and to pay for the transportation to get to the side of town
Yeah.
where those things are available.
Yeah.
I remember thinking, I'd always had this start-stop relationship with physical fitness. And I'm like, this is why people have personal trainers. There was no way I could afford a personal trainer. There was just no way. And now I get to enjoy that. Now I get to enjoy acupuncture weekly.
Mm.
And these are a lot of the things that limits for you, limits for us. In the conversation with my sorority sister, she lives in the Midwest, and she was just kind of saying, "Man, I need to lose weight," and I was just like, "Okay, like you know what to do. Let's talk about that." And then literally, she drove into a drive-through of a of a Culver's, and I was like, "Man, what
Don't
you
don't
doing,
do that.
Jerry?"
Don't do that to the sis, because life be life, and sometimes, man, you don't got it. You understand what it's like.
Which is these are the barriers that I'm talking about, right? And life for her is lifing. Now, are healthier options attainable? Yes. Does it require her to make further decisions and put off her satiation? Fulfilling her satiation maybe for an hour or two? Yes. Was she willing to do that day? No. But these are the hurdles that ultimately end up draining our Black wealth.
Yeah.
Because we cannot build the liquid assets. First of all, I think the gap in liquid assets between Black households and white households, I think as was estimated by the Survey of Consumer Finances, which is a survey that's conducted by the Federal Reserve. I think it's upwards of 200K is the gap.
Between Black family households and white family households.
That's the gap.
No, okay.
That's in liquid assets.
Okay.
So if you can imagine.
I got to ask the question then, because the number that you just gave me is a very stark number. $200,000 is a lot of money. I don't care what time period, right? But I'm also hearing studies, and we've been hearing this constantly for at least the past 6 years, if not more, that the majority of American households cannot sustain a $500 unexpected expense. So how can the gap be that large, but still the majority of households in America, Black, white, Asian, whatever the case is, still cannot sustain a $500 surprise expense?
Yeah. So let me correct. It's not liquid. It's accumulated wealth is the gap.
Got it.
Okay. It's the gap in the Black households accumulated wealth and white households
Got it.
accumulated wealth
Makes
is the
sense.
gap.
Okay, got it.
But even still, that still remains true because that's not just, a black and white household thing. That is the majority of folks don't have the liquid assets. That's what that sustain, able to sustain that kind of financial hit means. There isn't the liquid assets um, available in order to be able to
Take that.
be less impacted. Yeah. Um, and it is still very scary. I mean, I can't say that I'm there, right? Like, but the way that I think, and again, you have a school of folks who argue that the way to really um, reduce that is you can either reduce your healthcare costs, your individual healthcare costs, or you can increase your wealth, right? And what is available to me right now is to do all I can proactively to reduce the risk that might come with a surprise healthcare issue.
Now, I see how you answered that question. You said what you are attempting to do. You didn't say what you agree with. So before we move on to the next question, which one do you agree with?
I agree with both of them. Listen, if I could do both
You
at the
wanna
same
ride
time,
don't ride the fence. Don't come on here and ride the fence. Come on, you got.
no, because it isn't an argument of which is a better route. I think people have their perspective on what they think is more efficacious. But in my very humble opinion, it's better if folks can do both at the same time. To
fair,
me, if
fair enough.
it's better if you can shift from making healthcare reactive for yourself and more proactive, as well as increasing your liquid assets, right? And building your wealth. And there might be different avenues that people take to do that.
Yeah.
Then do it. I mean, I am trying to do it. I started my own consultancy.
I actually ask you the next question that I have marked down on my list. I think we need to work backwards just a little bit. I think one of the primary questions that a lot of people have, black, white, in between, or whatever, why is shit so expensive? Why
Oh,
is shit so real, like honest to goodness, real talk? Why is everything so expensive? Because as I'm looking at it, and you correct me because you're the expert, we're no longer in a situation like we were in COVID, where there were uh, chain risks, supply chain risks, and all these other things.
mhm.
And you would think that after we gotten out of that, that prices would have calmed down and we would have been settled. But it feels like everything from the cost of buying a new vehicle, or we just talked about that on the show last night. Cost of new vehicles now average close to $50,000.
Mhm.
Repossessions are at an all-time high. Black people are 2 times more likely to get their car repossessed than their white counterparts.
This is a drastic increase. An estimated 3.2 million cars were repossessed between 2023 and 2024, the most recent data available. Shannon Martin, an insurance expert with Bankrate, says part of the reason for the spike in repossessions has to do with how expensive new vehicles and even used vehicles have become. The average payment for a new car is $700 a month, and the average for a used car is $500 a month.
But then you put on top of that the cost to maintain that vehicle. We call that the hidden cost of car ownership. That's another over $500 a month. So Americans are really spending a lot of money, not just to buy a car, but to maintain their vehicles and keep their cars.
So I'm asking you these questions because it feels like everything, cost of living, housing, all of that stuff is expensive as hell. So from an expert's point of view, why is everything so damn expensive right now?
Yeah. I feel like we discussed this even the last time I was on. Um, but there are a lot of things happening in our world right now that add to the increased cost of living for everything. One of those things is tariffs. You mentioned cars. Most of the cars that we sell domestically, we don't build domestically.
Mm.
We import, and it's not even just the cars; it's the parts.
Yeah.
We are in a global economy, and so tariffs have had a huge ripple effect. But there are also other things at play. I think I just saw an article, shoot, and I wish I were able to quickly pull it up, that it was found that egg manufacturers were held accountable for falsely inflating egg prices from, like, I want to say it was maybe 2022 to 2024 or 2025 or something like that.
Mm.
And so you've got things like that at play. And granted, now, it's very hindsight. This information is coming out, and they are perhaps going to be held accountable for it. But you've got these things like tariffs that are legitimately increasing prices. And then you've got circumstances where businesses see an opportunity.
So capitalism at work, essentially.
Capitalism is at work. And we're participating because we keep buying things. The demand is there. I still am of the belief that if the demand is not there, then
There's no one that's going to be able to supply it, or there's no one that's going to want to supply it.
well, they're going to want to get off of what they're sitting on, right?
But that's what I'm saying. Is like if the demand is not there, they're going to find something else to supply. Ultimately, they're not going to move on to the next thing and to the next thing. But
or reduce the price, right? Yeah, I mean,
so
I still have this perspective. I mean, for me, gas is one of the best. And I think I used the gas example the last time I was on. It's one of the best examples. First of all, this is not the first time I have seen gas this high. It's just that I remember. And I think most consumers don't remember.
yeah, short-term memory. Yeah.
Our memories are not long. And so I remember in the summer of 2008, and I remembered having to fill up my car every other day because I drove 25 miles each way for work
Lord have mercy.
in my Mazda 6. Listen, you couldn't get me to not zoom down 294. But it was above $4 a gallon.
Yeah.
At that time.
Yeah.
So I remember, I mean, that I'm not saying that that's okay. I'm not saying it's okay now. Wasn't okay then, it's not okay now. But it can get there and it can stay there because we're still gonna drive. We're not gonna walk. We're not. I mean, not if we don't have to.
No,
Right?
I dig it. I dig
Not
it.
if we don't have to. So, when you have all of these things kind of coming together, because there isn't one reason why things are so expensive. There are a number of reasons, tariffs being one of them, bad actors being others, right? Kind of on the coattails of the tariffs.
No, I dig it.
We are in this
Venture capitalists buying up all the damn homes in everybody's area. So we know
there's that. We've got this K-shaped economy where businesses are catering to a higher income bracket more so than they are catering to the distribution of
Can you
income.
explain that? Can you give us what that is? I want folks to
Yeah.
know with some tidbits. So what is the K-shaped economy? Because what you said
Yeah.
is very impactful. Me and the missus, we love to go to Las Vegas every year, or just about every year.
Uh-huh.
And for the past 2 or 3 years, they've been saying that Vegas is no longer for the regular Joe to come there and spend their money and gamble and do the things, that they are actually catering
Yeah.
more to whales, as they call it.
Yeah, the big spenders.
Yes, ma'am.
So for the viewers and for the listeners, imagine the letter K, right? I'm going to specifically focus on the two angled lines of the letter. And there's one angled line that sort of there's an upward trajectory, and then there's the other line that's more of a downward trajectory. Now,
Right.
this upward trajectory, imagine these trajectories are income or socioeconomic status, right? Companies are now catering more toward the folks that are on the upward trajectory portion of the K, as opposed to the lower trajectory portion of the K. And that is because generally consumers on this upward trajectory portion of the K are going to be less impacted by major world events in terms of how they consume. Basically, they're going to spend the money anyway. They don't care what's happening. Meanwhile, folks that are on the lower trajectory, their consumption patterns are more volatile. And so here's an example where we are seeing this in the airline industry. This is exactly where we're seeing this happen. First of all, Spirit is gone. Spirit is gone. And then Southwest was like, okay, we're going to assign seats and you're going to have to pay for it. And if you want the perk of a free bag, you got to have our credit card. And so Spirit left the market, but Southwest didn't say, oh, we're going to reach down and down in terms of downward trajectory of the K and pick up Spirit's customer base. Southwest said, no, we're going for a different customer base. You've got Delta Airlines, who no longer is serving snacks and beverages on flights that are
less than a couple of hours or whatever.
Yeah, it's something like that. And then you've got Delta, who just like segmented up business and first class.
Yeah.
Right. And so there are so many things happening in this, in my very humble opinion, responding to this K-shaped economy, that this is also driving why things are so expensive, right? Particularly, it also depends on who you're talking to. People in the lower trajectory of the K are going to be feeling that, right?
Right.
It's going to be harder to get to Vegas.
Yeah.
But for people in the upper trajectory of the K, it's not going to be harder for them to get to Vegas.
Yeah. It's interesting that you say that, because I remember when the financial crisis happened back in 2009, that one of the, I guess, I don't want to call it demographics, but one of the portions of consumer sales that didn't take a dip but actually kept going up was luxury items, because people that had money weren't really impacted by So I'm going to ask you, you just gave a perfect example of Southwest and what that looks like, and all of the quote unquote bad actors that we have running amok in capitalism and allowing capitalism to do what capitalism. How effective do you believe, and I don't want to put you in a bad spot, but I have to ask the question. How effective do you believe policy would be to correcting some of that? Like I said, I'm not trying to get you in trouble. I'm just asking questions because I know folks got the same damn questions, bro.
Yeah. First of all, I just want to go on the record saying there are some bad players, but in short, and that I might have to just leave it there. Very.
I dig it. Okay. Like I said, I'm not trying to put you in no spot. I dig it. I dig
exercise your civic duty.
I understand. I dig it. I dig it 100%. All right. Official data says poverty is down, wages are up. That's what official data says. Unemployment is low. That's what official data says. And yet millions of people feel like they're barely holding on. In the communities our listeners come from, the gap between the economy is great and I can't breathe financially feels especially wide. How do you make sense of that as an economist, and what gets lost when we trust the statistics over what people are actually living?
Experiencing. Yeah. So aggregate statistics describe an average, but averages don't necessarily give you the detail in the lines. They don't tell you detail about the people who the poverty measure might undercount. So in June of 2026, and I think I made a Verity post about this. I'm not quite sure. But unemployment was down a little bit to, I think it was like just over 4%.
Yeah, 4.1, 4.2%.
4.2, something like that. But only like 57,000 jobs were added or something like that.
Yeah.
Household unemployment fell by, household employment fell by 507,000. And the labor force participation. Yeah, people left the job market. Okay. That rate partially improved because people left the labor force, not because more people found work.
Mm-hmm. Yeah.
So this is kind of like a mechanical quirk in the data. Wage growth is happening, but it's happening slower.
I thought wage growth has been stagnant for like the past 15, 20 years. Is that not accurate?
So it was like 3.4% in May of this year. And it's down from about 4 about a year to 2 years ago.
Okay.
But wages continue to grow, but the speed at which it's growing is slower.
So it's not keeping up with inflation and everything else.
It's not keeping up because costs have outpaced that pay, right? So while real wages are up, it can still mean you're underwater, right? It's how fast things are going ends up mattering. So kind of what gets lost in all of this is distribution, kind of volatility, the cost side of what we experience. These things are measuring like what people are bringing in, but we're like losing kind of the cost side. And some of these measures don't really capture how unstable income might be month to month. So you've got these larger aggregate numbers, but they might not capture kind of how unstable income is month to month, or whether costs rose faster than your paycheck rose. I think I did do a Verity post on this not too long ago. So it's not that the data are somehow fake or wrong, but what those data do is that they answer a different question than the one people every day are asking themselves. And what they can, how they can breathe financially. Perspective matters here. And, I was having a conversation with another good friend of mine from undergrad and this was some time ago, about perspective and to what degree are consumers actually feeling the things or repeating what's in an echo chamber. And if you had a 401k and you looked at it at that time, it was doing really well.
That's why the what do you call it? The stock market is not an accurate representation of how good the actual economy is doing. But.
Right. So, but I said, there are so many folks who cannot observe a 401k because they do not have a 401k to observe what they
48% of Americans do not have a 401k. Yes, indeed. You're right.
so what they are able to observe is their grocery bill. That's what they're able to observe. Perspective matters here.
Simple, simple.
And so again, I think, this is a point where you don't necessarily say, oh, the data that they're reporting, that's not true or it's fake. The thing that you ask is what question are those data answering? It's an answer to a different question, and does that even apply to me?
Mm.
And what is my actual circumstance? And I know how I feel. How do I feel relative to how I felt a month ago, a year ago, or relative to what I'm hearing right now
Mm.
amongst others around me, right? I think those are all really, really, really important questions to ask, but perspective absolutely matters.
Indeed. Okay. I think we have answered the question. I'm going to ask one more, the final question after this, but I think there was one piece that we haven't addressed. We talked about cost of living. We talked about why we believe things are so damn high, but I don't think there's a term that we continue to hear, and we've been continuing to hear, I think at least since the beginning of this year, and that's inflation. So can you please tell our folks, because I feel bad because I should have probably started with that. What inflation is, number one, and two, why inflation is important or its impact on a person's wallet, household, and so on.
Yeah, how can I put this without getting too technical? Because I don't want your audience's eyes to glaze over. There are very technical ways to describe inflation amongst economists in terms of the consumer price index. And I think Verity Consulting makes a post about this. But essentially, inflation is ultimately the increase of in price of the things that you normally buy. That's kind of the very, very distilled down version. But it's going to be the increase that's kind of above and beyond what you would normally expect to see in an increase in prices. And I think I am going to have to bring in Market Basket. I didn't want to have to do that. So the consumer price index is sort of
CPI.
The CPI is this measure of inflation, essentially. And if you imagine a grocery store and having your buggy or your basket, and you put into your basket the standard things that you would normally buy. This is what they are doing for CPI. They call it a market basket. And so they put those things in the basket, and then they measure the prices of those things compared to what those things were in the previous period, maybe the previous year, maybe the previous quarter, etc. And so if the prices for those things have increased, that's when you've got inflation. So it ultimately impacts everything that we are spending our money on, in one way or another. I mean, even if it's services, because at some point the businesses that are providing a service, they have to buy inputs. They have to pay for things in order to provide a service. So there may be services in your market basket. It isn't always things that you can touch and feel, right? But there may be things that you can experience, and those things are also impacted by inflation. That's as I think as basic as I can get it.
No.
Without going too technical.
Asking our listeners and our viewers to take some notes.
Yeah, I don't want y'all to have to do that.
Nah.
I don't want you to have to do that.
All right, I'm going to ask you this last question. I'm going to get you out on this one. Um, if you could redraw how this country measures poverty and well-being so it actually reflected the lives of Black families, what would you change first? And is anyone in the field already pushing in that direction?
Yeah, there's a lot of things there are probably a number of things that I would change. But I would first change the measure to be um, like an improved version of the measure to capture things that everybody is having to deal with on a daily basis. So I don't know if the United for Alice measure is the one that I would pick, but um, certainly moving in that direction. I would use a different um, I would use a different measure. The current measure is kind of a research supplement for researchers. And like I said, the national academies have already recommended this, I want to say a couple years ago, 2 or 3 years ago.
Mm.
Um, so I would say improve the measure and then recalibrate eligibility for federal programs based on this new measure. There are groups that are working on it. I mentioned United for Alice, National Academies. I know they've done some work on it. I can imagine there are a number of academic institutions that have research centers on poverty. I think Columbia University has one. They may be doing something in this space. Um, and so, you know, I think there's a lot of work out there being done, and maybe it's just not elevated um, on a larger stage. Maybe they are in rooms having very important conversations with decision makers. That's it's above my GS level. I don't know,
I dig it.
um, but there are groups that are working on this kind of work. That I think will be, if if implemented, will be um, a positive impact on Black households, because although I don't believe they are focused specifically on Black households, I think a rising tide lifts all boats. So, um, yeah.
I dig it. All right, we talked a lot this evening about this essay by Michael W. Green in the Poverty Line Debate. For you guys, we're going to have it in the show notes so that you can check that out. But it's on his Substack. Michael W. Green is actually a financial strategist and portfolio manager. And the title of that Substack essay is called My Life is a Lie. And this is just part one. There is a second part, but the most important or most jarring part was in that part one. So now that we've gotten that out of the way, Dr. Scott, thank you so much for taking time out to be on the show. I can't say thank you enough. I appreciate your time. Please tell these good folks how they can find you if they would like to find you.
Yes. So you can find me on Instagram at Verity Econ. That's VERITYECON. You can follow me there. Or if you have additional questions and you want to know more about Verity or how Verity might be able to serve you or your organization, you can email me at Christy, KRISTI, at Verity Econ. Verity Consulting, Verity Consulting LLC.com. So it's KRISTI at VERITYCONSOULTING LLC.com.
Indeed. Thank you, guys. I am Big O, Mr. In the Black himself. And I thank you guys for joining us for another incredible episode of the In the Black podcast. You could have been anywhere else in the world, but you chose to kick with us, and we appreciate you for it. Make sure you follow us across social media at In the Black PDCST on Facebook, Twitter, Instagram. Come on over and check out our archive at our website, www.intheblackpdcsT.com. And of course, you can get behind the scenes content of our show, conversations like this before they hit the public by coming over to our Patreon. I promise you will not regret it. But until next time, as always, informed, intelligent.